So I think there is no right answer to this question. I'll tell you what my belief is, and then we can decide whether it's the right belief or not. If it empowers you, adopt it. If it limits you, don't adopt it. So the way I look at it is, right, if you looked at the world of scarcity, equity was control. So if you had to take decisions in a company, ownership of the company was the most critical factor for you to remain at the helm of the affairs and run the company. But now you look at it in the place of abundance. My belief is that competence gives you control. So if I may own 1% of Profitwheel, but if I'm the most competent person to run it, who's taking it from zero to multi-billion dollars, then I'm the one who's going to get the opportunity to run it further. So then what happens is the equity I own doesn't matter. If you want to build a really scaled global company, you need to have, we have an office in US, my co-founder is in Boston, we are developing our products in Europe. Now the fact of the matter is that if I go down that path, creating a multi-billion dollar company, then I need millions of dollars of capital. I'll just start, and then I'll need hundreds of millions of dollars of capital to build a multi-billion dollar company. So the thing is that if you have really high ambitions, I would recommend that you should raise capital. There are multiple benefits of raising capital. The first benefit is that when you go and raise capital, let's say if I'm coming to you as a person and say, okay, you know what, I'm starting this company, this is my idea. You will say, fantastic idea, Vivek, you must do it. I'll say, okay, can you give me 50 lakh rupees? And then once you ask that person for 50 lakh rupees, then you will come to know how good your idea is. Because the fact of the matter is, then you will come to know what are the flaws in your idea, how you should develop your business model. It's only when the guy writes a check and gives you that money, that's the only way of knowing whether he endorses your idea and he likes your idea or not. So when you're raising capital, so one of my friends is a person called Carl Mehta. He gave me a very interesting story. What he does is when he has a new business idea, he goes and he meets 99 VCs. So he has this big fat book of 500 pages. He goes and pitches to the first VC, makes notes, improves his pitch, goes to the next one, next one, next one. Even if the 10th guy says yes to him, he still goes and meets the 11th guy. He says that these are the smartest individuals in the world. People who are going to fund your company are the smartest guys in the world. So the fact of the matter is, if you can get free advice from them, what you should do in your company, that will help you build a better company because you will know what the potholes of your business are. So raising capital, when I started Communicate to, I raised capital. But when I started Profitwheel, I've raised capital from almost 20 people. So first I raised the first check, which was the $1 million check that I got from a friend called Rajesh Jain from Netcore. And he just loved my idea and he said, okay, here's $1 million. But after that, I took almost $1.5 to $2 million more, 50 lakh rupees each from 15, 20 individuals. Now the benefit was that all these 20 individuals are helping me build a global company. All the individuals act like my bouncing board to my idea where this is going to be a successful global company. That means I have 15, 20 people who have said, yeah, this is a good idea, and I'm endorsing it, not just by words, but by a check. So automatically what happens is that I'm starting off with this ambition of building a large company. So it depends. If you want to create an oil refinery, then you need capital. If you want to make a panwala shop, then you may not need capital. So there are enough examples of companies who have not raised capital and been tremendously successful, but there are enough companies who have raised capital and also are tremendously successful. So the way I look at it is, it's your philosophy. I'm a person who does not believe in control. I believe that I want to create a multi-billion dollar company. Even if I have 1-2% of the company left when it becomes that size, that's good enough for me. The journey of creating this multiple billion dollar company, global company, is what I'm excited about. I'm excited about the journey itself. So again, this is the philosophy I have. If you believe that this is the philosophy, it empowers you, adopt it. Otherwise, you can build very successful, great companies like Zoho and Freshdesk, etc. have proved you can build really large companies without raising much capital. In fact, Rajesh Jain talks about this concept called Profitwheel. He's built Netcore into a large company which is going to be a multi-billion dollar company with zero capital, with his own capital. So there is no right answer. Whatever empowers you, adopt it. So I think when people invest in digital companies, in exponential companies, you have to remember that I've made 25 different angel investments. I'm hoping that a few of them will become 100x, because a few of them already gone bankrupt and a lot of them have already become zero. So if some person comes to me and say, okay, this is my idea and I want it to become, it'll become 3x if I become successful, then for me, I'm very hesitant to invest in that company. Because what happens is that 10 saal mein to, even in a bank account, your money will double every 5 years. So the fact of the matter is that the only way for me to make money is if some of these companies become 100x. So when you go to an investor, just be clear that you need to create a company that is going to become 100x or 1000x. If that's not the narrative or the story you have, then raising capital in the world of abundance is very difficult. But if it's going to become 2x, 3x, then it's a safe bet. You're better off with a bank loan, better off with money from your father or your own monies, because it's a safe company. If you want to build something which is risky, where there is a possibility of that one becoming 0, but that one becoming 100, that's when you go and raise capital from people who are betting on you becoming 100 or 1000x. But again, the narrative is very simple, right? So let me give you an example of a narrative of Profitwheel, how I raised capital for it, and how we expect this company to become large. So what happened was that if you take the world of advertising, when 100 rupees is spent on selling a product, maybe 1-2 rupees out of that goes towards advertising. But what happens is that when you sell a product for someone, then if the margin of the person is, let's say, 30%, he's in a way happy giving you even 10 rupees or 10% of that monies. So that means 2 rupees on 100 can actually become 10 on 100. Now if you take the advertising market of the world, it's $700 billion. In India itself is 70,000 crores. So that means you can actually potentially get almost 5x of that market if you are able to sell the product for the person. Now the thing is that today 20% of the customers give you almost 200% of your profits. So if we have a technology that allows you to take your best customers, and we created almost a DNA footprint of those customers, and then help different companies find similar customers, imagine the amount of we can create for them. Baseline of a company is profit as a service. So what we're going to do is, if we help you acquire customers that give you most of your profits, can we take a share of it? Can we take 5% of it? Can we take 10% of it? If you're able to take 10% of it, then basically it becomes 5x of the total size of advertising, which is $700 billion. But the fact of the matter is, even that 10%, right, what happens is that when you take advertising expenses, it comes on the profit and loss account, it's an expense. But when you take that 10% of a sale, it becomes a cost of sale. So it comes in the balance sheet. So even if I want to spend $1 billion for Siddharth in Celebrity School, as long as I can make him earn $10 billion, he'll be willing to give me that $1 billion. So now the thing is, when somebody asks me what is the market size of the company that I'm going after, so I'm going after 5x of advertising because I'm going after cost of sale. So that's the narrative we built, and then we said, okay, if this is what we want to do, which sectors we should focus on? We want to focus on direct to consumer sector. Now, direct to consumer sector itself in India is $100 billion opportunity. You multiply it across the world, it's a multi-trillion dollar opportunity. If we can really help direct to consumer companies get more business from the existing customers and find more customers like that in other parts of the world as well as in other markets, then we can take a share of that profit. If we take the share of the profit, of course, we can attempt to create a multi-billion dollar company. So again, this is the story, this is the narrative we gave, and we were lucky to raise capital with this narrative. But whatever business you want to do, your narrative has to be strong. Your narrative has to be something that you're going after creating a dent in the universe. You can't say, I'm going to create 2x of this, because then nobody's interested. So at least for me, I have the safety net. If I have the safety net, I want to go out there and do something which I know I'm not capable of doing. I started a product company, I've never started one. I'm starting a global company, I've never started one. I've never had co-founders earlier. I've never raised this kind of capital before starting the company. So I'm putting myself in this growth zone, and that's when you create wealth. Because I could have been keeping a job in Dentsu for 10 more years, retired in Dentsu. I'm sure I would have grown in Dentsu. But the fact of the matter is, it would have not been a growth stage. So one of my principles and mental models in happiness is that happiness comes in the growth phase, not in the phase of stagnation. So I think there are two ways to do this, right? I think investors need credibility when they're talking to you because they don't know whether they can trust you. So my recommendation is that instead of cold calling an investor, try to get somebody who knows them and get them to introduce you. I think that introduction, even luckily for me, we have private equity guys approaching us, but even the people that I know, I'm getting introduced to them through someone. So I know them well, but somebody else knows them better. They introduce me because then what happens, the credibility of that person gets transferred to the investor. So what happens is, if you take, I come from the search industry. The search industry and organic search, SEO, the most important thing in SEO is actually something called link. So what happens is, if there is a website of Google and Facebook and it links to Profitwheel, automatically I get a lot of credibility, because now Google and Facebook are telling that Profitwheel is an important technology that customers should be using. Same way, who introduces you plays a very critical role when you approach an investor, because more than the idea, they need to believe in you. When I do angel investing, I don't look at financial models. I look at the person. I look at who the person has introduced, got the introduction through. What is their vision? Are they willing to conquer the world? So I think the most important part to raise capital, first round can be your friends and family, can be your own capital. But when you start approaching investors who are not known to you, then it's very important to get introduced to someone whom they respect. If you are able to get that introduction, then you'll start at least a few steps ahead of anybody else who's approaching them for investment.